welcome to everyone. Glad you've been out to join us. I hope you've got your morning tea with you. My wonderful wife today has made me these great freshly baked blueberry muffins. After I put shit on her a little bit last week, she did tell me that these are diabetes and heart foundation friendly. That'll teach me to be a diabetic. But at the same time, I got my coffee. Grumpy old man. I think she's telling me something there. That's okay. We'll deal with that. She's a wonderful, wonderful person. That'll teach me, won't it? Anyhow, look, thanks everyone for joining us. Before we kick into talking to our guests this morning and answering your questions, we better remember to thank our sponsors who support us thick and thin. They do great things in our industry, and they're there to support you. Make sure you check out the services and the loan products that they provide. And yeah, thanks to our sponsors. They're all really great people. So let's move on to our guest this morning. Is the infamous George Dib, who appears to us on this slide naked. Well, naked in the face. He's grown a bit of hair of late. I'm trying to do a little bit of that at the moment. It's not working so well. But George, welcome to Q&A with Whitey. How are you going?
I'm going well, Pete. How are you?
That's good, mate. Good. I wish I could grow the facial hair like you. I'm not doing so well at the moment. That's all right.
I actually shaved this morning.
Did you?
Yeah.
Yes, I'm not surprised. Some people like that. Don't take your shirt off. My wife, the rug happens, you know. He goes everywhere. Hey, George, thanks so much for joining us this morning. Sorry we had a little bit of a little glitch with our introductory video, but we've moved past that. Hey, I want to talk about AMFIN, of course. Have a chat about yourself and what you're doing and a bit of your background. And then we're going to jump in and you and I are going to tackle some questions from the brokers who have submitted them through to us. And we'll see how we go there. So, mate, tell me a little bit about the George Dib background. What's your background? Have you always been in lending or in finance? Is this something new? What's your story?
All right. So my stories, if I give you the brutal, honest answer about my story prior to actually being in asset finance and finally, finally my calling, I was probably one of the most unemployable people ever. That's the best way to describe me. Prior to setting up my own business, which is about in total about 3 years now, I probably had about 8 jobs, all in different industries. Those industries were sales background roles, so with relationship manager roles, anything from FMCG to digital cameras to a few other things in between. And to be honest, I just didn't enjoy it. I always had this desire to be in finance from a very, very early stage, but I just never did it. And I actually wanted to be a mortgage broker. That was the thing. There was 2 things when I started my career. I wanted to be either a mortgage broker or a lawyer. But I guess.
Wait. There's a couple of extremes in there. I mean, great aspirations to be a mortgage broker. What's this lawyer piece? Goodness
I don't know.
me.
I was actually quite academic until I got to year 10, and everything beyond year 10 was absolutely downhill. So barely finished year 12. Funnily enough, my year 12 exams I didn't sit. I had an operation prior to my year 12 exams. So I was lucky enough to get a mystery mark, because if I had to my exams, I probably wouldn't have done too much better. So,
mate, funny you say that, because I never completed my high school certificate. I dropped out in the August of what was year 11. I became very sick from the February on there, and got back to this is all too hard and I'm out. So I only did what would be in year 10. I never did my high school certificate. I'm a high school dropout.
There you go. Look,
sorry about that.
But you know what? Again, some of the I guess most of the successful people in the world have not finished school or barely finished school. So I think it's just desire. But fast forward to the role that essentially led me to this. I was working in a job that I was actually getting paid quite well. But if I was probably working 2 of the 5 days. It was a really, really boring job. So I spoke to one of my family members who was actually working in dealership space. And I asked him what he did. He goes, I'm in asset finance. I look after dealership space. and this is the type of job that I do. You're seeing new people every day, and it's actually a fun gig. I go, okay, great. I go, all right, so what kind of money is involved? Because that's the first thing that used to come to my mouth back then. What kind of money is involved? And he said it's X amount. And I'm like, are you joking? He goes, yeah. I go, okay, great, sign me up. So I literally, not smart back then, but I quit my job without having an interview in place yet. Got 3 interviews after telling him that I quit my job, because he obviously didn't want to leave his sister's future husband out of a job. Went to all 3 interviews, got all 3 jobs. Then I went to the one that was closest to home, because again, very bad employee, closest to home, and that's where I found my calling. Like, I loved it. Like, I instantly fell in love with automotive finance, and I fell in love with
doing F&I.
Yeah, F&I, exactly. And I think I was fortunate enough to come into and I was 31 back then, and just to give you a bit of an idea of what my life was back then as well, I literally took a pay cut, because with F&I, yes, the money was great back then, but you're back to essentially an apprentice salary. So I was getting married, I was building a house, and I took a job which literally, I think, quartered my income went down to a quarter of what I was earning. So I put us in a pile of crap. But again, I think it was one of those defining moments that taught me that I was able to deal, to see something out, right? And I think that's what eventually happened. I saw what the future held, and the rest is history.
Yeah, that entrepreneur was busting to get out by the sounds of it right from the beginning. I spent quite a few years doing F&I back in the latter part of the 80s, showing my age a little bit. It was a great time in one respect. It was a good time to make money. It probably wouldn't wash under consumer credit laws these days. But yeah, we'll leave that back in the past. So that got you into the asset finance area, look at, and then you've set up AMFIN. Tell us about AMFIN. What is it? What does it do?
Well, it all stems from the automotive space. So I was very lucky that our general manager there of asset finance was also a mentor to me. And from the moment I stepped into the role, I said to him, I go, ideally, as a stepping stone to my next phase of my business life, I really want to own my own brokerage. And he goes, great. He goes, beauty is that you're going to learn your craft here, but our business actually also owns a brokerage, so you can refer deals in. So I took this as a really strong opportunity for me. So we obviously have our customers. You know how F&I works. You go, you buy a car, they come into us and they talk. Now, I think one of the things, even back from a compliance perspective, as we were talking about, I had a really good teacher. Like our mentor, I was taught the right way from the beginning, and I think I came in towards the back end of, some of the stuff that was happening in dealership space, so that I didn't really know how to do anything different, but, quote repayments, quote interest rate, and actually tell the customer what the fees were. So do the stuff that wasn't really renowned with being an F&I manager. And as a result of that, even though it wasn't cheap, like, that dealerships aren't cheap, and we weren't, right? Yeah. People liked the experience. And as a result of that, I was getting referrals. And it just happened to be that a lot of the clients that were coming in were mortgage brokers. So they'd say, hey, look, yep, I've got my finance sorted, don't need to do it. And I'd be like, look, just listen to me. Let me go through what I can do for you, run through my process, and then after that, make a decision. They liked what they saw, sign up with me. And then as a result of that, they'd say, hey, look, we're a mortgage broker. This isn't necessarily the type of stuff that we like to do, but we get clients of ours that are continuously asking, are you able to help with it? And I'm a yes man, so I said, okay, yes, I can. And again, that came down to the fact that we had the dealership group that owned the brokerage. So I started to become that middleman between the mortgage broker and our brokerage firm. But I saw that this was starting to become something big for me. So I started to build up a referral network. And again, a mortgage broker would refer another mortgage broker, then another broker. And then it got to a point where, I'm not going to lie to you, I was only in the automotive industry, in the dealership for 2.5 years. So I went from being a trainee, and I ran the dealership after 6 months. So, but in that time, 2.5 years, and I started to build up my own clientele, which were mortgage brokers, and I started to hatch this idea in my head that if I'm going to do this asset finance thing, I want to be a partner of mortgage brokers. I want to be able to sit in the background of their businesses, and I want to essentially make it streamlined and uniform so that when a customer comes in to transact with the mortgage broker, it all looks like it's coming from them. So I hatched that idea.
I see that, yeah.
And
I see that in your website. There's a nice little flow there of how you run that part of the business. It's good stuff.
Yeah, look, and I think, again, a reason why, if you fast forward to now, which has only been a couple of years, why we've been so successful, we stuck to it. We haven't deviated away from the fact that we want to be part of a mortgage broker's business. We want them to be the ones that get that are in the limelight, that get the accolades for, hey, helping a client out with things, not just the mortgage side, right? We want to be able to say, hey, look, you can come to this mortgage broker and you're going to be able to achieve everything that you want to achieve through there and create stickiness for the broker. And that's always been,
yeah. So you guys don't do home loans?
No, at all.
So you do cars, trucks, construction equipment. What do you got else here? Agriculture stuff, business finance, all that sort of stuff as well, yeah?
So we wanted to try to find the stuff that a broker needed us for. And again, the beauty about it for our mortgage brokers, it's plug and play. Like, you know, our expectations are that we can help them when they need us. Like, you've got your brokers that are asset finance brokers that are just really good at asset finance, but there are some things that just don't have access to. They can use us. We know that. You know, we're not going to, sit and think that we're going to be everything to everybody. It's almost like, hey, take this part of what we do, great. But then on the other side of that, we've got mortgage brokers that literally use us as their asset finance business. And we run the business finance side of things because they like the uniformity in the approach. And they like the fact that it's never going to hit one of our databases that goes directly to the client. And like I said, I think the most important thing with any business, and I found it because I like to deviate away. I like to come up with new ideas. I like to try to do things differently, but it just still leads me back to, hey, focus on what's working for you. And this is working for us. And it just means that I've now, even as a result of a period like this, I've just decided that, hey, how am I going to make this better? What are we going to do to make the experience for the broker and their client better? And that's us.
Excellent, lovely. Well, that's good stuff. So AMFIN, sounds like like I said, that entrepreneur within just had to bust out, and that was its journey. And you talk about earlier you were saying when you were talking about yourself, you had about 8 jobs in a short period of time. I went through all that. At a period in the 80s where that was really frowned upon. If you move jobs too often, people sort of looked at you a bit sideways, saying, well, why can't you hold a job? And but it was more the fact I was trying to push the boundaries of knowledge and where I wanted to go. And as soon as you hit a ceiling, if you've got that entrepreneurial spirit, you hit that ceiling and you go, yeah, that's not good enough. I want to go further. So if I can't do it here, I'm going to move on and do it. Mate, that's really interesting. Now, you're a bit of a social media star too. You've created some things that have unleashed a storm in the industry. And one of them's Joke of the Day. And the other one is a new one you're bringing out, or it's just been released, of quarantine karaoke. Let's start with the first one, Joke of the Day. How did that come about?
I don't like isolation, and over and above isolation, I don't like. And again, it's negativity, right? Like, for me, I try to block out negativity as much as I possibly can. And understandably, over the course of COVID-19, there's reason for negativity. But for me, for the way that I operate and the way that I'm built, I need positivity. I need, humor. I need to be around people. It's just part of my genetic makeup. And I was looking at it, and I'm watching all these things on LinkedIn, on the news, everything that was happening around me. I tried to block it out, but then you just don't. And then I got to a point where I wasn't blocking it out. I was feeling like crap. I genuinely was. And I saw people as well. A lot of the narrative was around, hey, this is negatively impacting us. People are losing jobs. What is the future going to look like? And I'm just like, you know what? I need to get myself out of this. So I just put a joke up. I just threw it up there. I said, you know what? I just want to make people happy. I saw the joke and I was dying of laughter. And I hadn't laughed like that for months. Like, I was actually crying, and the joke was so bad, but I was crying of laughter. Like, you know what? I like this. I'm going to put it out there. People like it, great. And I hope I can put a smile on someone else's face. And I got messages after, and it actually did what I wanted it to do, was make me happy. So that's essentially what I wanted to try to achieve out of it. It's just to make myself happy.
Well, you've made a lot of other people happy at the same time. Do you know how many people have done the jokes now since you first started?
Well, I lost it for a while because, and I'm not going to say anything, I'm a male, but us males aren't very good at taking instruction. So hence the reason why I started to diversify a little bit. And ever since,
and hence why that too.
And shout out to Jess Stevens from Adelaide Bank. She got it back up and running. And as a result of that, people have stayed the course. We've managed to continue the joke. And I reckon it's probably hit about 40 or 50 people as minimum.
Oh, I would think so, yeah. And it's still going today.
Yeah.
Excellent. And so what happened is people tell their jokes online, or they record it, put it out through yourself, through LinkedIn or wherever it goes, and then they nominate who's next to do it. Yeah. They pass the baton on. Yeah. Very good. Very good. I love that. There's been some ordinary jokes. There's been some good jokes, but it's all been a good laugh. I must admit. So, mate, that's an excellent initiative in these sort of times. And now to back that up, talk to me about your new project, Quarantine Karaoke. What's that all about?
So I thought, you know what, this is pretty cool what we're doing. And you know all those shows that are on TV, those live shows, Who's Got Talent, that sort of stuff, which I don't watch. I make a point of not watching any of that stuff. I thought to myself, what other ways can we look at embarrassing ourselves further, but put something behind it that will help our broker partners, right? So brokers. And I thought to myself, look, why don't we create Quarantine Karaoke, where we have people within our industry, whether they're BDMs at lenders, through the associated bodies, through even other bigger brokerage groups, sing on behalf of a broker, right? And I thought the only way that I'm going to get people to actually sing in this thing is to dedicate it to a broker that broker actually wins a prize at the end. Because again, like I said, the people that are feeling this more than any of us is that broker that sits at home, that has gone through the Royal Commission, that things were starting to look up between January, Feb and March, and then all of a sudden this tidal wave of COVID comes in. It's just like, give us a break. Give them a break. And I thought, why not do something that, again, is a little bit more fun over and above what we've done. And at the end of it, they get a prize as well. But just to know that we're thinking of them, you know, because they're the ones that are affected more than any of us when it comes to this thing.
Mate, that's great. A great initiative. And I did feed you the line because the FBAA is backing what you're doing on this. And I did allow you to use a little video clip of my attempts at singing back at the conference last year, which was purely taking the mickey out of myself. But I reckon that if I can step up there and make an idiot of myself, everybody else looks fantastic. So I'm looking forward to seeing all that rolling out. It'll be fun.
And again, the people that have joined and done it, you probably wouldn't expect that these people are going to do it. So I'm looking forward to announcing them. There have been, I'm not going to lie, there have been a few hiccups. Some have pulled out. So we've had to, change it around a little bit and bring a few other people in. But yeah, I just want to put it out there that it's really not for us, it's for the brokers. We want to give them something to smile about.
Yeah, something to smile about. So when do you see that rollout cruising on?
Next week.
Or has it? Next
week?
Ready
by most of the sites are done by now.
Yeah. Okay, so everyone get ready next week to start and follow and see what's going on with Quarantine Karaoke. Looking forward to that. Excellent. Well, mate, that's great. Time's marching on as it tends to. We better answer a few questions that have come through from brokers who are following us and watching us now. And so I'm just going to go through these questions. In certain respects, I was going to say there's no right or wrong answers. They're our opinions as far as the responses are concerned. And some of these questions I've got to sanitize a little bit. So I won't necessarily name names. You'll understand the sex why I'm saying that. So I got to be careful somebody doesn't get upset. So let's see if we can tackle his first question for Barry. So it says, given CBA's being grilled about the removal of dividends to shareholders and poor overall results and report this quarter, and they've announced closures in excess of 100 branches and home loan clients being sent to brokers while their staff move into manned call centres. And it was CBA who wanted commissions and trails to cease in the Brokers Royal Commission. It says, has CBA lost their way, and how should we as brokers respond? And I don't necessarily want to have a picking competition on poor old CBA. I mean, they did have, what was it, 83,500 breaches of the AML-CTF Act, the 18 months, 2 years ago. And yes, throwing us under the bus at the Royal Commission and walking away from it. Can't say that was a favourite thing. There's a bit of bad blood in the market as to what happened then. And sometimes we have very short memories, and that's fine. So, yeah, have they lost their way, and should we as brokers, how should we as brokers respond? I think one of the things we've got to remember, and George, this is probably a bit before your time in our industry, but throughout I was probably say around the mid-90s, banks started shutting branches all around the country. It actually would have been the early 90s. And that's what drove the broker market space to the roof, because as the bank branches were shutting down, brokers around the country go, well, we'll come and see you at home. We'll sort it out for you. Don't worry about that. We can look after your needs. And that was the beginning of the rocket ride for brokers. So, yeah, when these things happen, it's not unusual. They're quite often advantageous for brokers. It's whatever corporate decisions these people are choosing to make, but there's usually an advantage for brokers somewhere in these things. I don't know what you've seen, George, or what you think about that.
Look, you're right. At the end of the day, it's one of those things that is literally out of everybody's control. And one of the key things I think with any business is don't focus on the things that are out of your control. If you've still got access to product that's going to help your client, then regardless of what any of these institutions are doing, the things that may put us all off, you just got to focus on what it is that you can do for the client, and most importantly, what's going to help you get through this. And look, you can say that not just about CBA, you can say it about a lot of institutions. What were you doing before? I feel the biggest thing that's lacking now, I guess, in that part of the banking sector is just relationship with the broker, relationship with the end customer. That's the kind of stuff that just seems to be, not as what it used to be even a year ago, 2 years. Where we're going down a path where everything's becoming so sanitized, and there's no real love out there. That's probably the best way I can put it. Is that there's no warm and fuzziness that you want to feel from the people that you're banking with, or the people that you're originating a lot of volume through. And look, yes, understanding that you've got to fix remuneration and make sure that you're not making a broker or any one of us lean more towards another lender, but there's still got to be that respect for the people who are originating business with you. And I think that's what brokers are looking for.
Yeah, and you're 100% right, because again, going back to that 90s period where the broker market share started to kick off and grow, and then went ballistic throughout 2000, and we are where we are today. But the banks built a lot of their businesses off the back of brokers. So that's, I guess, why I get a bit bitter about it at times, and brokers get bitter about when you get thrown under the bus, or when you see, forgetting which bank or whatever, you see bankers doing some stupid things. It really gets under your wig. The one thing I do like at the moment is ME Bank's new advertisement, which basically says go see your broker. I mean, that's what we want to see. Macquarie's done a bit of that in the past as well, but they're really pushing hard out there. So there's a little bit of love coming through, which is nice.
Yeah, look, it doesn't make sense to me that a client, it's in the customer's best interest to go direct to a bank. And the biggest reason behind that is that not every bank's certain loan structures and criteria meet that client. A broker is there to help assist a customer pick the product that's right for them. And what are you supposed to do as a consumer? Go from one bank to the next and hope that you're going to get an approval? It doesn't make sense to me that the mortgage broker isn't the one that is celebrated by a bank. It has to be celebrated.
Correct. Yeah. And they are the professionals, and the terminology of best interest is going to be something that plays out for the rest of our lives. And I said last week, with best interest duty, this is actually a part of a presentation to clients. A part of your sell is the fact, not only do I normally, as a human being and as a business person, act in your best interest. I just do that, and all brokers around Australia do that. But now there is a piece of law and legislation that surrounds it that ensures that I must have your interests in front of mine. But when you go to your bank, they can't say that, because they're not covered by this best interest duty. They can't tell you the bank next door is products they've got are far more suitable than the ones that you've got. So there's a big positioning statement that sits in that under a best interest duty that supports what you're saying, but supports the business of broker as the leading professional in our industry as to why that is the person you go to get advice from. And all the banks should be riding off the back of that, because they'll all win, because it's one of these things that all flows around the circle. So, hey, I better keep going. I've got a question just been sent into us, which is directly pointed for you, George, and it's from Gorinda, who asks, George, what do you think the future role of a mortgage broker is versus a bank?
The future role of a mortgage broker, I think,
Yeah.
and it probably comes back to the way that we structure our business, is that don't give your client a reason to go somewhere else. And what I mean by that is, if it's a mortgage broker, make sure that you're offering everything, right? And understandably that you may not have the capacity to do it yourself, but make sure that you have partners that are aligned with you, aligned with your vision, and offer everything. Because the risk of just being a mortgage broker is that if you have a client that comes to you and says, hey, I'm looking to buy a car, and your immediate response is, hey, I don't do cars, you're going to have to find it somewhere else. There may be a mortgage broker out there that actually does cars, and they will not only win the car, they're going to win everything else, because they've gone to the customer and said, hey, I'm happy to do everything for you. I want you to come back to me. When your mortgage is completed, understand that you're probably going to buy a car in the next 12 months, and I want to be the person that does it because I've got your information and I want to be able to look after your finances. So the mortgage broker needs to adapt and evolve so that they can keep their customers sticky.
Yeah, and I think too, what it creates is that stronger relationship. Again, I actually cut in the 70s my teeth in mainstream banking, and it just, even back then to where it is today, it seems to have lost the ability for that personal connection. I must admit, the Westpac ads that are on TV at the moment actually are really damn good ads. It actually feels like there's a connection there. But generally speaking, from a consumer, consumer or borrower's relationship or interface with a branch, seems to have lost. You walk into a bank branch these days, there's no one there. It's just a series of screens, or there might be one or two people. That I can remember, like I said, go back to those early banking days of mine. The bank manager knew everybody in the suburb. They were on one-on-one names, and it was a real disaster if they got transferred out. You said, oh shit, don't know who to talk to now. So yeah, it's interesting times with that, and that relationship is key. And this is where brokers excel, is getting that relationship right, having that suite of products. Yes, the initial focus may be on a home loan, but having the asset finance and the other consumer finance easily available to them to look after their clients, so they don't wander off to the bank because they want a personal loan or a car loan instead of coming to you. So, and that sort of plays to my next. Yep.
Yeah, the activators are supporting that. They're saying diversify your business, just do it the smart way. That's it.
Yeah, exactly. And that sort of leads into another question up here of any hints on how we get back to where we left. I suppose one of the hints is to get back where we left is to make sure your relationship's right with your client. And sometimes, I had a question today on it on email. There's a little unease around a lot of the stimulus packages for borrowers have no commission to brokers in, and I guess this is where you get a little bit of a step, because this is only a short-term period, but a little bit of a period where if you really want to look after the relationship you've got with your client, you just do it, because you live to play another day. Right? If you tell them to can't help you because I don't get paid for it, then somebody is going to do it, and whether it's straight into the bank. But you need to live to play another day. And I know what we're seeing at the moment, brokers' volumes are going nuts. So there's plenty of business floating around. But I think that piece to get back to where we left, I don't think is very far away from us, but you need to look after your clients. Do you find that, George, or how do you see it?
You've got to nurture your clients, you do. And most importantly as well, during periods like this, you've got to be the person that can go to the client and say, hey, I know my product back to front. Because realistically, with the lenders and the current landscape, they've changed everything, from, LVRs to what they're going to accept as far as income, commission income. There are so many things that have changed. And I think if brokers have used this as an opportunity to educate themselves across the suite of products that they use, and even ones that they don't normally use, and be better, I guess better with those products as well, you're going to look like a superstar in front of your clients. And I think, I guess for us, if I'm looking at it from our business, April was a really good opportunity for my guys to learn stuff that they didn't know, to learn different things, to be able to have a conversation with the mortgage broker, which is our client, and say, look, we can go to this lender, but it's going to take 10 days. Or we can go to this other lender, have the same sort of criteria, but it might be a couple bucks more expensive. but this is what, but the customer's going to be moving quicker. Like be smarter.
Yeah, I had a media piece out yesterday talking around that sort of thing, the delays and drags that are happening in the marketplace, and you've got to watch how that plays out. I've got a bit of mess here. Mate, are your staff still working from home, or have you got them back in the office? What are you doing there?
Rotated. So
rotated. Okay. Well,
yeah.
somebody's sending a business. I just got a message through from somebody who's listening now, and they've just submitted an accreditation form online, and they're waiting to hear back from someone. So I'm sure one of your staff will be back to them real quick. So,
yeah, Chris Reed will be on it.
Yeah, there you go. He's on notice. On notice. What do you think the forecast for the industry is over the next 3 to 6 months? What do you feel about that?
That is probably the hardest question that continuously rolls on in my mind on a daily basis. You know, I think, as you said, the volumes are coming in, right? There seems to be a lot of activity happening out there from a mortgage perspective and also in the asset space. Look, the one thing that's obviously taking a big hit is the unsecured business lending part, but you can see that's coming back.
Yeah.
The issue, and again, I don't like to focus on negative. Again, I am a positive person. It's just that what will happen in the next 3 to 6 months. I think, you know, as people start, as restrictions start to ease, as we start to go back to what our lives look like now from a normal perspective, what's the roll and effect? What is the true damage going to be as a result of this in the next 3 to 6 months? And I think that's probably the lingering question for me, because, you know, if I look at us right now, we're going great guns, but you have to have that in the back of your mind. You know, you've got to make sure that you're prepared for what the future has. I'm an optimistic bloke. I think that we're going to be fine. I think that if we continuously work hard, we're nurturing our relationships with our customers, we're educating ourselves, we're doing things that are outside of what we probably normally do, then we're going to be better prepared than the person that's literally sticking in their lane. You can't stick in your lane and expect that it's going to all be the same thing.
Yeah, I agree. And I think, you know, with the government trying to, whether we agree with the border conversations, you know, being up here in Queensland, we want to keep you Mexicans south of the border. You know, we don't want you to bring your dirty germs up here. There's obviously the federal government and the premiers are all trying to look at reinvigorating their economies, getting business back into a normal, whether it's the old normal or a new normal, but trying to get those wheels turning again. And as I said before, we've already commented on, is that we're seeing lots of brokers with significant volumes and more volumes than what they had last year. So it's actually increased. It's one thing to get them in, it's nothing to get the deals done, we know.
That's right.
But I think been in this game too long.
We laugh about it, but we're all sad about it.
Yeah, but I think that it's a lesson. Look, but that is a lesson I learned from Mark Bouris. I was Mark Bouris's first CEO when he set up Wizard, and that was in the 90s. Mark always said to me, it's about making your own luck, right? And it's nothing to do with tossing a coin or anything. It's about crunching numbers. If you don't have the numbers to crunch, you won't get the percentage outcome at the end of the day to write the deals, because there's always that drop down effect. So you've got to make your own luck. And, you know, it's just something that plays out in life. But I think that, and I'm like you, I like to be very, very optimistic about the future. I can actually see right now, we're going to come out of this really well. It may mean, though, there's a lot of work to be done to restructure clients that may have taken a stimulus package, taken a 6-month payment holiday, got into some of the SME stimuluses and so on, and need some really professional work to assist them to get to whatever the next step is, or to get out of it. You know, some of the problems I had, people taking, you know, if they qualified a 250,000 unsecured SME debt, capitalised interest for 6 months, and wind up with 2.5 years to pay back P&I a $250,000 loan. That could be very challenging, but you should be able to restructure that. And this is where I think all brokers in the country need to look beyond what's at the point of their nose. They've got to look across all the options in the marketplace, the alternative lenders, and make sure that they look after their clients to transition from this period into what will be another period before we get back to normal everyday living as such.
Yeah, look, we all set milestones and goals for our businesses. We've got our 1, 2, 5 plans. Why can't that be the same for our clients?
Yeah. Yeah. Exactly. Yeah.
Got to help them out.
Exactly. So I have another question here. Should banks mandate that client's ID be done via IDU remotely versus face-to-face? So that's, I guess, remote identifications versus face-to-face ID. Do you think that should be? I think that should be a commonplace thing as we go forward. I kind of think that this is forcing a whole lot of new norms.
Look, we're fortunate enough in the asset space that we're already there. Like we've got, we do FaceTime with clients, and that's more than enough for. And funny enough, some of the lenders that are also practicing, that are in the mortgage space as well. So, we've been fortunate enough that with a business like ours that operates across the whole country, that we can't get to people. We can't see people face to face. So there's got to be other measures that are in place, whether it's through technology or different other requirements to get more information about their ID. It's a necessity, especially with the pandemic like this. How on earth are you supposed to see people?
Yeah, exactly. But I think this is one of the things that forces measures forward that have been in the background. So we've had green ID floating around for a while, and there's a whole host of variations on the theme. And there's been resistance in my mind for lenders to use it. But now, you basically, because of the circumstances, as troublesome as the coronavirus has been, but it forces those steps to happen. Even though they should have happened before. I think we'll see a whole lot of new norms out of that, which will be good.
Yeah, good stuff will come out of this for sure.
Yeah, exactly. Here's a good one for you, for a man who's heavily embroiled in the commercial and SME space. What guidance do you provide, or would you give to brokers for the use of commercial mandate agreements, in particular post the COVID-19 period?
So
what's your views on? Yeah, I presume so. Yeah, or whether it's even a mandate that's paid at settlement of the transaction. So there's a couple of ways I guess we look at it. It doesn't specify here, but the use of mandates. What are your thoughts on that? I'll give you mine. And you think about it. My thought is you can't have two bites of the apple. So if you mandate someone who says, I'm going to charge you a fee and it's payable at settlement, which I think is the most appropriate way to do it, is one way. But if you get a commission, you shouldn't be taking both. Take one or the other.
Look, the way I think of this and how it works is that I understand the need for mandate with a lot of commercial transactions, because essentially what happens is that there's a lot of shopping, right? And you end up getting to a point where you've done so much work for the deal and then it falls over. I guess we don't do it here because, again, it's the mortgage broker. If they want to do it, we leave it to them. But my thought process on a mandate is that if you're going to charge the mandate up front, to minimize any risk of, putting all the work in without being paid, if the customer does go ahead with you, I think it should be offset off the commission. So if you were supposed to make, $6,000 on the com and you took 2 up front, then you should only really take 4.
Yeah, that's a fair call too. Yeah, I agree with that.
You don't take, as you said, you don't take both. You charge you up front, they go ahead, great. You offset it. If they don't, by all means, you should be able to make some money off your time.
Yeah, I agree that the whole shopping point, I think, is very, very valid, because it wastes so much valuable time. And none of us are in the business of wasting our time. And you've somehow got to put a peg in the ground so that cycle stops. Interesting. I'm sure many people got their viewpoints on it, but that's ours, and we'll continue on. The next one I've got here from Meg is, what would be your suggestion for someone who has been a broker only for 1 year? It doesn't ask what those suggestions might look like, but my first response is keep at it. It's a great industry. So suggestions. It's diversification's one, isn't it?
Yeah, one of the things that I find about the new brokers is that they're not preconditioned, right? Which means that, and again, this comes down to the aggregator. A lot of the aggregators now are doing education. They're educating them from start, teaching them how to structure deals, teaching about diversification across different forms, whether it be asset, whether it be business lending, whether it be insurance, superannuation, commercial. It's just to keep at it, like learn everything. And again, don't try to be a master of everything. Learn your craft. Make sure that you're extremely good at the one thing that your main focus is. But again, partner with others until you feel that you're ready to do it yourself. Because the last,
and I guess too, No,
Yeah.
go on.
No, because the last thing you want is to say, yes, I can do it. Try to do it yourself. You put up a deal with the lender that it shouldn't have gone to, right? You know, until you have that experience, you know, you rely and lean on partners, lean on your BDM to give you more insights as to what you can do with the deal. Don't say no, but just find the suitable things so that you look like a superstar at the end. But try to learn as much as you possibly can about your craft first, and get others to help you with the ancillary products.
And although this is a mandatory piece of consumer debt, but I still feel it has a very valid position within all forms of SME and commercial lending. Make sure you have a good mentor to do what you were saying, to make sure you get, you're placing the right deals at the right place with the right level of information. They're structured properly. You need a really good mentor. So whether it comes through your aggregator or through an independent mentor, whichever, but make sure you're a really good mentor to make sure that they're helping you to guide you on your journey.
Yeah, look, and one thing I've found about this industry, which is really pleasing, is that people are willing to work with each other. Like other mortgage brokers who don't have any, you know, I guess no need, no real reason to help you. They're just willing to put their hands up and say, hey, yeah, I can help you with this. I can guide you on what you need to do here. So I'd lean on the people within the industry and just say, hey, look, I need help. And if they're not willing to help you, I'd be shocked, and I'd say that their business isn't going too bloody well either.
Yeah, probably right. And actually, you are right though. It's a really lovely thing in our industry where people are willing to help others, and there doesn't seem to be a lot of barriers, unless, as you say, possibly they've got issues of their own. But you know, the people who are well skilled in this industry are so willing to share knowledge and to help. It's a really nice thing. Yeah, I got another question here from Gordon about as a small brokerage looking to expand quickly into both Queensland and New South Wales, what do you recommend? Don't go to New South Wales, they're full of disease. Come to Queensland. Did that happen again? I think we've talked a lot about that. We've spoken a lot about how to get businesses kicking along. And I guess if you're looking to open interstate, it's partly about having either a referral network or people locally on the ground who are going to help drive your business forward. Partnering.
Yeah, partnering, and look, and also leaning on people that can help you with marketing content, right? The thing you said from the outset is if you want to expand into different areas, you'd hope that you have a target market that you're looking for, then structure your marketing content to suit that specific target market that you're going for. And look, and that might mean a range of things. You put people on the ground, which is very difficult to do right now, or even looking at marketing agencies that can help you, see what your aggregator can actually do for you as well from a marketing perspective. Even people like you guys, you know, speak to you guys about what you can do, what's best practice to bring people on. And I think, you know, the way that usually works as well, pick up the phone.
Yeah, exactly right. And that's a good segue for me too, to remind people about the FBAA's broker support program. Make sure you get on and have a look at that. We're actually putting up new blog content as we speak today. So there's videos and blogs and marketing material that's all freely available through the broker support program. So hook into that, because that'll help you as well.
To the viewers, we didn't set it up. We didn't set that one up. I said to the viewers, we didn't set that one up because that was perfect.
Oh, no, yes, sorry, mate, yeah. My apologies, I've been having signal issues today and it's been pretty good so far. But yes, that was not preset. That was just came out of thin air. So that was good. Hey, here, I don't know how much you know about these industries. I used to know a fair bit about them, but I'm a bit light on these days. But Leanna's asked us, will home values in tourist or hospitality concentrated locations be as affected as predicted with restrictions easing earlier? So I guess that's looking at residential lending or residential home loans that are in, you know, clusters of tourist or hospitality concentrated locations, and how they'll be affected with restrictions and then their easings. Yeah, it's a challenging question. I can only punt and say that I'm in Brisbane on the Gold Coast, but I imagine down the Gold Coast where they're heavily reliant on tourism, that, you know, it would be a matter of what the economic impact is in that area, how that then flows into mum and dad's purse, and whether or not they're being able to meet their payments. So we know the property market, though, is still generally fairly stable. There's been a little bit of slippage, but not a lot. And I'm kind of hoping if we get out the back end of this quick enough, then that slippage will be, you know, sub 10%, not around 10 or 11%. And certainly not at 30% as one bank was talking about.
Massive. Yeah. Look, this is an opinion again. This is probably something that I really
it is an opinion, yeah.
But
Yep.
it really comes down to borders being open. Realistically, the future outlook for our country is that we're not going to be able to travel overseas anytime soon. So the natural step for most people that will in our country is that you're going to want to go to other states. You want to enjoy what the country has to offer. And we spoke about this before the video, is that being able to go visit places that you probably wouldn't visit because you wanted to go overseas and do it, you know, see things that you haven't seen. So it's honestly one of those flip of the coin things. I don't know. I really don't know, but I hope that it would be a positive if they open the borders. Well, Queensland opens their borders, but you know, they don't want anyone in.
No, we don't want that negative inflow in our state.
Look, you think you want our money so that you can buy that that airplane company.
Virgin.
Yeah. One of some going around. Do you think you'd want our cash so you can actually pay for it?
Well, you know, there's always deals somewhere, I guess. All right, so last couple of questions before we're going to have to finish off, buddy. Time has flown as it always does. This is one for me, which I'll quickly answer. From Madua sent me a question asking they want to attract younger brokers to be their mentor, but they're an MFAA mentor. Can I be accepted as a FBAA mentor? Well, there's two parts to that question. One is you should be an FBAA member. I mean, that's a given, right? It's my show, I can say it. But look, we don't have any problems there. You can be an approved FBAA mentor. And I will say it, unfortunately, because you aren't a member of ours, there is a bit more process to go through because we've got to get to know you. But it can be done. We've got plenty of people who are mentors of the dark side who are mentors on the good side as well. I can say what I like.
Yeah, I'm not going to get involved in that one.
Yeah, so that's all right. It's all fun and games. All right. Now, with COVID on the rampage, and this question came in the other week, but do we feel that APRA advised to banks to loosen documentation in relation to NCCP new loans to restart a stalled economy? So do we think that APRA will advise the banks to loosen documentation? And my first response is no. We haven't seen that happen. I think it's unlikely they want to loosen documentation. They've relaxed some of the restrictions from moving into interest only, which I think is fair and reasonable. But I can't see any bank, because APRA governs ADIs, that's all deposit-taking institutions, Australian deposit-taking institutions, so all the banks. I can't see APRA instructing banks to loosen documents. So what do you think, George?
Look, for me, in order for us to continue on and go down a path of being able to get through this and make money and put people back into their jobs, there has to be ease. Like, we have to, maybe not again as far as the documentation perspective is concerned, but they have to ease up. Like, you know, people aren't earning what they were earning, and you know, some of the capacity calculations that are put in there, I'd say most brokers out there agree that they're over the top, well and truly over the top. So, you know, it's extremely important that they give us a bit of leeway and a bit of breathing space, and give the clients some breathing space so that they can get on with their normal lives. Like, if we're going to go down the path that they originally had set out for us, that's the thing that could essentially put a halt to what we're doing in the next couple of months.
Yeah, but that's a credit assessment position, not necessarily a documentation. I think there'd be a huge amount of issues regulatory-wise to loosen documentation, but to change that credit policy position. So APRA did that a bit on the what's the word I'm looking for, but on the servicing rate. So the margin they put on top, that moved back. So that was common sensing. That happened last year. And there probably, as you said, there's probably more things that can be done around that to ensure people go into and come out of this period. I mean, I was the first to get into the media and onto the ABA about when we first were going into this, that people who took a part of the stimulus package and say did a 6 months holiday were not classified as being arrears, right? So they weren't put in default. So we were the ones that challenged that into the market and got the answer back, because structurally it doesn't go down that journey. But from a credit policy point of view, you wouldn't want to see that as being a negative to getting finance in, let's say, 8 months' time.
I think it will. If I'm going to be really honest, I think it will.
Yeah.
Look, you look at even this COVID loan. I think the business loan from the the chatter and, you know, some of the things that I see around, it's being assessed exactly the same way it would have been assessed 6 months ago.
Yeah.
Like the whole purpose of this loan is to help people out of your situation. Yeah.
No, exactly right. Yeah.
It doesn't seem
Not
to be
to bury
flowing
them.
on.
Yeah. Yeah. Well, mate, I'm going to have to finish up shortly. I think I've got another message come through here, but I believe Chris got on the mission really quick. So well done, Chris. He did his job, so I got a message through that, yeah, well done. And mate, we're probably going to have to roll things up now. And I want to thank you so much for spending some time with us. I loved having the conversation and your points of view, and knowing a little bit more about your background and AMFIN and the great things you're doing to keep the spirits up within our industry through Joke of the Day and Quarantine Karaoke. So, mate, that's fantastic. Thank you so much for joining us today.
Thanks for having me, mate. I appreciate your time.
No worries.
Awesome.
Speak to you
Had
soon.
a good time. Thanks. Bye.
Take care. Bye. All righty. Well, it was great talking to George, and hope you enjoyed that conversation. And look, some of these things are personal opinions, so you may or may not agree with them, but they're our opinions, and that's all good. So next week we have a guest from overseas joining us, and a lot of you may be aware, at least I hope you are, that between myself and this person, Samantha Gale, we established the International Mortgage Brokers Federation, the IMBF, and I sit there as the global chairman. We have 6 countries involved, and Sam is going to join us next week, who is our co-chair or co-president, if you like, of the IMBF, and we're going to talk about what's happening in global marketplaces within mortgage broking. The IMBF meets every month by video conference, and we've been discussing what's been going on through the COVID period, and I think you'll find extremely interesting the impact of what's happening in other markets in mortgage broking compared to what's happened here. And so we'll talk about Canada, obviously in quite detail, and additionally from Canada's perspective, we'll also talk about what we also know what's happening in other markets. So make sure you register and join us next week when we speak to Sam. It's going to be a very interesting conversation. You'll learn a lot from that. So register for that. And as we wrap up now, again, we want to say thanks to our sponsors for their support that they give us. It's very, very much welcomed, treasured, and it's a pleasure to have them with us. Make sure you look at what they provide by way of services and products. And after we close off shortly, you'll get an email from us which will give you your code for your CPD allocations and a short survey. We really welcome your feedback. And also don't forget, when you register for next week's session, you'll want to be on that. That conversation is going to be amazing. Make sure you get some questions lined up. Shoot your questions through and we'll answer them on the spot. All righty, take care for now. Have a wonderful week. It's been great chatting to you, and I'll see you next Thursday. Bye.